Hi everybody, it's Christopher from Serene Education with the 4 majors and notes update for the 15th to the 19th of September 2014. Guys, very important week. We have the Scottish referendum vote this coming Thursday, and there's a lot of emphasis on that vote, especially for, well, globally, but more importantly for sterling itself. But before we get to that, let's get on and just have a look at the first pair of the day, is the euro against the US dollar. We'll look at the weekly just to see how last week fared, and you can quite clearly see that we had a very indecisive week. We saw a bit of selling to start with, but come end of Friday evening, we saw a major pullback, and prices pretty much closed where the open was. And subsequently, what we have now is this indecision candle. And primarily what it's occurred is after 3 consecutive weeks of very, very aggressive selling. What it's done, however, it's still trading below the 50% fib retracement from the 2012 lows to the current 2014 highs, and we're trading below that 50% retracement level. Price headed into, didn't quite clear to the 61.8 level, here roughly around the 1278 and change, but we're still below a 50% retracement level, and that now for the coming week is going to be my resistance. Okay, so look at the setup for the weekly. You can still see that we have our red arrow to the upside. Candlesticks are red. The RMO is below the 0 level, and our MACD or OSMO indicator is still very much below the 0 level. Very important, you can see the long-term sentiment here for euro pushing lower, and the R-squared is complementing that. So as it stands at the moment now, we're looking for only selling sentiment intraday. You don't want to be looking for any bias. The only time we're going to start looking at looking for opportunities is going to be from Thursday onwards. As I mentioned to you, we have the Scottish referendum vote this Thursday, and it could be an absolute game changer if it does go in the direction of the yes vote. So it's going to be a bit tentative this week. I think everybody's going to be pretty much looking to see what happens for the Scottish referendum vote and how that turns out. So news-wise, have a look and see if there's anything out this week in particular that's going to really move euro. In particular, we have economic sentiment figures on Tuesday. A lot of data for the US market throughout the week, but I think the most important one is going to be the vote. So just looking back here on Wednesday, we have a lot of information for the US dollar. On Wednesday afternoon from 3 p.m. onwards, we've got the FOMC economic projection figures, and we also have the FOMC statement and the interest rate announcement for the US dollar. They don't expect any changes. That's going to remain at 0.25%, so there's going to be a lot of data. We also have GDP quarter-on-quarter figures for New Zealand dollar. So quite an eventful Wednesday prior to the Thursday. Just treat this week like you would do with a non-farm payroll. So let's continue to the next particular pair. But looking for further negativity for euro. Just a quick one, looking down at the daily time frame. There we go. On the daily, you can see price being quite consolidative this week, and still below the 50% fib retracement. So that's still going to be our resistance level. If we don't see that level being breached this week for any time soon, then we should still be looking for a bearish bias. Moving on to sterling, very, very important one. You can quite clearly see on the weekly, we haven't seen any new highs. In fact, we've seen more lows, and we got below the 23.6. We had a slight pullback at the underside, resistance, and then price just literally sold right from the 23 right through the 38.2 level, and then we saw price consolidating under the 38.2 level. We saw a bit of selling as we did on euro to start the week off. However, by the end of play, we saw sterling gaining a bit of strength and subsequently moving and closing to the upper end of that candle. However, it is still below the 38.2 level on my weekly. So notice what price has done in the past at this level. Prior resistance here through 2012, in fact, going through the end of 2013, we saw further resistance, but going into the start of 2014, we actually saw support, and price was able to build on that. However, saying that, we've seen price falling lower, and subsequently we are trading at the underside. So that 38.2 level now becomes my resistance level now for this new upcoming week. Okay, so if we drop down to the daily, you can quite clearly see we saw 4 consecutive days of pullbacks after a gap down in the market, after those initial figures coming out of Scotland, that the yes and no votes were quite pretty much right on with each other in terms of where the percentage lay. So not a really good sign for sterling. And subsequently, we have seen prices pulling back just to kind of fill in the gap. And that's what you tend to see with price gaps. We don't see a lot of gaps in the market, especially on currencies. However, you can see quite clearly here we did get a gap lower on the start of the week. However, that's now been filled. However, price has still not managed to close above that 38.2 level, as I mentioned on the weekly. And subsequently, you can see here on the daily. Okay, you can quite clearly see daily all negative, and the R squared is complementing it. We saw last arrow was red. However, that is now blue. So now we have a blue arrow, but the candlesticks are still red, RMO is still below, and the RSMO is still below. So out of the 4 requirements, 3 of them are negative and 1 is positive. However, you can still see that price is making swing lows. We haven't seen a new swing high. In fact, if we had to see a new swing high, price would have to be above the 38.2 to actually really put some mustard into that. Until such time as price is trending above that level, I am still looking for a negative sentiment. Okay, and then as I mentioned to you, the most important part of this entire week is going to be Thursday's vote for the Scottish referendum. A lot. Sterling is a lot's riding on it, especially for sterling. And yeah, if you want to read up more about it, please do, because you need to understand the fundamentals behind that one, and because of the whole detriment if Scotland actually gets its yes vote. So have a look into it. But as until such time, looking for negativity on this particular pair, as long as she's capped by the 1627 and change mark or the 38.2 weekly fib level, look for bearish sentiment for the remainder of this week. US dollar Swiss franc on the weekly. If euro is moving lower, you should be looking for bias to the upside for the US dollar Swiss franc. And you can quite clearly see on the weekly, if I just pan in here quite quickly, you can see that we had a very bullish prior week. However, as we saw with euro, we saw a lot of selling, and then we saw buying towards the end of the weekly session. Here, we saw a lot of positiveness. However, by the end of the Friday, we saw prices pulling back. It is still trending above my 23.6 fib level. Euro below the 50, this one above the 23.6. And you see the bias on this particular pair. We have a blue arrow, candlesticks are blue, RMO above, the OSMO has been above, and you can see the long-term sentiment on this particular pair very much to the upside as it stands at the moment now. So as long as she's trading above the 23.6, this level here at the 0.92769 and change, that becomes my weekly support line. As long as prices can maintain above that level, I should be looking for a bias to the upside. As I mentioned to you, just looking at the fundamentals this week, we have a lot of data for the US market this week. Most importantly, Wednesday is going to be quite an important one because of the FOMC statement. Plus, we also have the interest rates announcement for the US dollar. So a lot's going to ride, and subsequently, we've got to be well aware of that. So the long-term trend has been negative, but the intermediate trend has been up, and we are trading higher than the 23.6. So this level now becomes my support level, and the price can actually build on this bias to the upside. Then I'm looking towards my monthly fib at the 23.6 at 969 and change level for my next potential target. And where price is trading right now to that level is in excess of 350 odd pips. So more than enough on this particular trade to the upside, as long as price maintains the bullish bias above the weekly fib level here at 0.927 and change. So this week you're looking for buying opportunities. Daily, let's have a look and see what's happening on the daily. Clearly you can see on the daily here all positive. So however, consolidative. We haven't seen a new high on the daily. We haven't seen a new high all week on the daily. So it's consolidative above a major weekly fib level. So it's positive consolidation and an uptrend. And you can see we've seen swing highs, swing high, swing high, swing high. As long as she doesn't fall back below the 22.6, I'm looking for buying opportunities for this particular pair. Last pair of the day, or last pair I'm going to do this for the analysis for this week, is going to be the US dollar Japanese yen. And the US dollar Japanese yen has seen a lot of positiveness recently. And subsequently, we've seen almost a full month of bullish sentiment, a nice breakout of this consolidative range. Prices have been consolidated for such a long period of time, and we wanted to see a break of this consolidative range, and we sure got that. Very bull market, bull uptrend breakout, and subsequently since then we should have targeted the 105.57 and change, would have been the prior support and resistance level higher. This pink line constitutes to my monthly institutional moving average, which has been capping price for so long. It's imperative that we see price, as you can see, the weekly candle is broken above it. This level now at 106.436 and change, this becomes our new support level. So for the remainder of this month, in fact, for the remainder of September, I would like to see price now trading above that level. It's imperative. If the US dollar is still to remain positive for this against the yen, we need to see prices actually building on the momentum as done so for the last month, and subsequently being supported now by our institution moving average going forward. And if we can see September closing above that pink line, then we're going to see a very, very positive next couple of months for the US dollar against the Japanese yen. So look for bias intraday. So daily, let's have a look at the daily. You can see quite clearly here a lot of positiveness, blue candles, blue arrow, blue candles, all the moving average below price being supporting, RMO above the zero level, and has been for a significant period of time. The RSMO has been very, very supportive of price, and you can see that we've seen prices moving higher. So as it stands this week, look for buying opportunities, guys. The indicator box is telling us we should be looking for bias to the upside. Long term is supporting the intraday, and the intraday is supporting the long term. So happy days. Look, as long as we can stay above 106.43.6 and change, look for further buying opportunities, guys. Other than that, very short and sweet to the point. Please, please, please be well aware we have the Scottish referendum vote on Thursday. It's going to be a lot of speculation leading up until that day. And then we're going to have the vote day, and then we'll know Thursday night, or mostly Friday night, or Friday, what's happened. Okay, and there's a huge, huge risk for sterling. Sterling is going to be the talking point this week, and we're going to see a lot of volatility on sterling because of that. So be very vigilant, guys. If you're on trading, please stand aside and be very, very cautious with your opportunities. There's going to be a lot of speculation, a lot of volume is going to be moving backwards and forwards, and you don't want to be caught up in that going in the wrong direction. So please, money management is the utmost importance if you are trading this week. And if you are trading any sterling crosses, be vigilant, be very, very cautious, because you're going to see a lot of volume because of the importance of what sterling holds with the Scottish referendum. Other than that, I'll leave you with that. Have a fantastic trading week, and as always, trade serenely.